electric vehicles. Um, they were all the rage pre-pandemic, early pandemic. You know, you hear, Cabot, our newsletters. I think there are more newsletters that had electric V or EV recommendations than not, I would say, ranging from companies that you rarely hear anything about anymore. Polestar, um, Nikola, remember that one?
Yeah,
I think we
workhorse.
talked. Yeah,
Yeah,
Workhorse. Yes. What was that? Workhorse was electric
that
trucks, right?
yeah, that was Nikola's electric truck, I believe. Right?
Oh, I thought Workhorse was a different company from Nikola.
I don't think
Anyway,
so.
yeah,
Maybe
okay.
maybe it is. I don't remember. So I mean, case in
Yeah,
point, though,
anyway, my
right?
point
Like that's
is that they were all, you heard about all these companies back then. Now you don't hear about it as much. And, what you hear is that Tesla is struggling, and it has. Now, what Tesla's share price is up in the last month or two. But the fact of the matter is, Tesla, went from, growing 50, 70% sales, 50, 70% a year in 2022 and 2021 to down to 19% last year. And then this year, the first quarter of this year, they're their first um, negative sales growth quarter, down 8.7% in the first quarter, and then only grew by 2.3% last quarter. There's been single digits or less for 4 straight quarters. Rivian is down in the latest quarter, is down to 3.3% growth after being no less than 80% growth in any quarter of the previous several years. Um, it's been a bad time for electric vehicles. Now, reasons behind that, I wrote about this the other day. People have, and we've talked about this before, people have pivoted to hybrid cars, hybrid, electric, gas and electric vehicles. I have one myself, as I wrote about the other day on the Cabot website, a Volvo, um, and it's reflected in the data from last year. Americans bought a record 1.2 million electric vehicles last year, up 46%, but hybrids sales grew 65%, and 10% of all new cars purchased in the US in 2023 were hybrids versus just 7.6% for pure electrics. And I think that trend has accelerated this year, where people, I think there was a lot of excitement about the idea, the concept of electric vehicles when, it was sort of a new thing. I mean, Tesla's been around for a while, but then when new companies like Rivian, ones we mentioned, Polestar and uh, Workhorse, BYD, and even that BYD's sales, I think, were negative in the most recent quarter, which is a huge departure for them. Um, there's all this excitement, and then as we've talked about, I think I can't remember if it's a Tim Lutz sort of credo here at Cabot, or if it's a Mike one. I don't know. That there's sort of the romance phase, and then you eventually hit the reality phase, and the reality
yeah.
phase has arrived. And while electric vehicles are not, 46% growth last year is still pretty solid. I think that's going to be a lot less this year. It's not like they're not growing anymore, but hybrids have become sort of a happy medium. And the reality is, for people just aren't quite ready to go all electric yet, whether that's due to costs, whether that's due to, you know, not enough plug-in stations. Hybrids sort of at least I know I can find a gas station. I don't know if I can find a charging station. It's sort of a happy medium for people, and the reality phase is here, and it's been bad news for electric vehicle stocks. I guess my question is, are they too oversold? Because they've really gotten beat up of late. I'll let you go for a second. Let me look up. I'll look up
Uh,
some numbers.
yeah, it's so hard because like you said, it's not like an established sector with like a ton of companies that are all
Right.
churning out EVs, and we've got like a bunch of peers that we can value. You look at a company like Ford that trades at like 6 or 7 times earnings. They lost $132,000 per F-150 Lightning, which was their
Hmm.
fully electric Lightning. And that's just like their CapEx spend that's sort of amortized over the total number of vehicles that they sold. I don't know if the figures, I don't know if they use the same figures for like the Mustang Mach-E, but like all these legacy automakers are trying to sell EVs. BYD is probably in a better position as a pure electric play. They're trading at 20 times earnings. Tesla is trading at we'll look it up right now, but I think it's got to be close to 40 to 70
Yeah.
times earnings. Yeah, they're trading at 61 times their trailing 12 months earnings. Tesla also has other unrelated companies, SpaceX, which we'll talk about a little bit later.
Yep.
Um, like, does Musk personally own Twitter? Does Tesla own a chunk of that? I don't know. Like, I think he just personally owns all of it. But there's not like a sector that we can just look at and be like, okay, well, here's what we would expect for the valuation for the sector.
Right.
Um, the big boys are all losing money. Toyota never got into all electric. They were just like, hey, hybrid, which is I think is the right move. Like
Yep.
I am the exact guy that you would think would buy an electric car. I don't drive a ton because I work from home. My gym is a few miles away. We have two vehicles. Both are like mid-sized SUVs. We could have like a road trip vehicle and an electric car, and we've just sort of not taken the plunge because like you see the horror stories of the guy that pulls up into like the Safeway, the double door entry for the grocery store to like plug into the outlet because all the electric car chargers have their chargers cut or because there's no other outlet anywhere else. And people generally want to do the right thing, but they also don't want to completely overturn their lives to get there. And
Right.
hybrid is kind of the sweet spot. Um, I mean, like if I have to buy an EV company, I'm probably buying BYD.
Yes. Yeah. And I've been high on that one for a while. Its latest quarter shows that even it is feeling the effects of sort of this pullback in sort of EV fever and transition to hybrids. Um,
The other
but
thing is China with them though, right?
China,
Like China's
yeah, yeah,
its own mess. Their economy has not bounced back in the way that
yeah.
a lot of people were expecting and were hoping certainly. Um,
They'll
so
need to expand, and then they're in the process of doing it. But they'll need to expand in a meaningful way beyond the Chinese market to really become a true sort of global Tesla competitor. It's clear it's their price cutting or cheaper prices, I should say, have really thrown off Tesla off its game in China.
yeah,
But they need to become more of a global presence. They have no one knows what BYD is. There are no BYDs in the US until it gets into, I guess it doesn't have to be in the US market, but it needs to be in more markets to expand. But I guess my takeaway is this: if you were to buy, given them the valuations are technically they're not undervalued on a pure valuation basis, especially given the recent pullback in growth. If you were to buy an EV stock now, Tesla, BYD, Rivian. I mean, Rivian has done nothing but fall since it came public. It came public at like 130 a share in November 2021. Tough timing. And down to 13 a share now. If you were to buy any of those now and hold them for a year, would they be up? I don't know. I don't know that they would be. I think we might still be in the EVs might still be in sort of this uncertain reality. But if you were to buy them now and hold for the next 5 years, the next 10 years, I think you'd make pretty good profit. And, I think given the maturity of the companies that put out hybrids like Ford, Honda, Toyota, Hyundai, I think you'd probably do better than those companies over the next 5 to 10 years buying one of these, one of the few EV companies, EV stocks. But in the next year, uh, I, I it's a coin toss.
so I mean, one thing that I was thinking about is like, all right, well, BYD, none of like the bigger EV makers are really pure play EV investments. Tesla is driven very much by Musk and by the other companies. BYD is driven very much by China. The other big EV players are mostly legacy automakers, so they're all very different stocks to buy.
Hmm.
Um, Rivian is something of a turnaround name. I think the risk with Rivian is that people might be hesitant to buy a Rivian vehicle based on what happened with Fisker. So Fisker's Ocean,
Yes.
once Fisker went through started the bankruptcy process, it basically you can't get parts, you can't get service. It's not, they haven't exactly gone out and like bricked the cars, but if you're left holding a Fisker right now, you might be in a tough spot, and you're going to be looking at like aftermarket service or aftermarket parts or something like that. Like you lose out on a lot of the advantage of owning the EV, which is maintenance is easy, repair is easy, or it's all handled by like this one central company. So I don't know, maybe Rivian, if I wanted to try and make a pure EV turnaround play that's
Yeah.
sort of disconnected from other investing themes that could have an
Right.
outsized impact, like China, like
Yeah.
the legacy auto business, that kind of thing.
Yeah. Tesla has Musk baggage. BYD has China baggage. Rivian is and the case for Rivian, it did seem to, at least temporarily, bottom in all the way back in April, around in the mid eights. It's now up to 13, almost 14 a share. Got as high as 18 a share in July. So it is on the right track, but the fact its latest quarter sales declined 3% for the first
Yeah.
time. Its history is at the very least a yellow flag. Um, so yeah, given that, next year, like I said, who knows? But I do think if you bought Rivian shares now and held on to them it's like no matter what happens, I'm going to hold on for the next 5 years. I think you did pretty well.